Investors and traders, welcome to the channel. Market chart pattern today is 26th of December 2024. Hope everyone is having a great day, and Merry Christmas to everyone who celebrates. And today is holiday in the United Kingdom, but the markets in the United States, they were open, and also in other parts of the world. So we'll be taking a look at the key US markets. As always, this video is for educational purposes only, and it is not a financial advice. So this format is going to be a little bit different. I will not go into too much details of the patterns. We'll just cover what we were looking at, some of the key markets, the key levels that we were watching, how those have held or traded recently. And then we'll also take a look at some of the key US tech stocks as well. So here we go. We'll start by taking a look at the 10-year Treasury note. It's really interesting here because this 10-year and duration of 10-year and above 10-year are the products used in terms of used by credit card companies, auto loan companies. They use these markets to mark their rates for charging the loan rates for credit cards, auto loans, and of course, towards the end of longer term long bond futures, they are used for the mortgages and stuff. So this is why it's really important to take a look at these markets, and also the way these markets are actually moving. It's quite interesting. Why? Because the Federal Reserve actually, over the course of past few months, they have actually embarked on an easing program. So they are actually reducing the Fed fund rate. So that's the shorter end of the curve. But what we have seen is towards the longer end of the curve, the market is doing something else. That the yields have actually been moving higher. So we can see that we had a key pattern formation right here, where we were looking for this market to start moving lower, meaning the yields moving lower on the 10-year Treasury note. But what we saw was it did happen. We found support from the 38.2% retracement, and it just began to rise higher. So I believe the Federal Reserve, they came out with their interest rate decision in November, somewhere around here. We saw a dip, and then when they came back and did another cut recently in the month of December, we have seen the market actually shot up. And what is interesting is that after finding support from this 38.2% retracement, it's just gone up to 1.27 to expansion of this little swing. Today was really interesting because the market actually closed negative from a key level, and the chances are we might actually see a further pullback, so the easing of the yields in the 10-year Treasury note. But this market remains on the yields keep on rising, especially after breaking this key resistance level. The chances are this market is actually likely to move higher, so the rates even moving higher. This is the way it looks, unless this market turns out to be a case from this level where we begin to see further ease in terms of the yields, because the market had done something like this around here. I'm looking for maybe for a couple of days, maybe the yields actually pull back a little bit lower. Then we'll have to wait and see if the key support levels actually begin to break on the yields. This is really interesting what's happening in this market, and if we just take a look at the futures market, we can see that this is also based on the price. So the y-axis is actually price. It found resistance from the 38.2% retracement, and found good support here on today, and then on 24th, before the markets closed for the Christmas. 2 consecutive days is held here, so the chances are we're going to see some bounce in this market. But for now, I'm just looking at for a bounce, not really a sustained rally here. Okay, so let's go back to the shorter end of the curve and take a look at the 2-year Treasury note. So the 2-year Treasury note actually is right in this level, in this zone, and it is a also a resistance level in my opinion. So we could see some pullback in the yields as well on the shorter end of the curve as well. So this is what we discussed last time. If we just put Fed funds on, and we look at what the Fed funds, where the Fed funds rates are at the moment, Actually, let's try doing that right now. Just want to reiterate that this is something we took a look at last time as well. Oops. Let me actually do it in a different tab. It's easier that way. In a new pane, here we go. So the Fed fund rates are about 4.64 percent, and if this Fed fund rates, they actually move in a window of about 25 basis point. So there is like upper and lower boundary for it, and this is how they move in that band. So if you take that and you just subtract to get the lower band from this rate, then the 2-year Treasury note and where the Fed fund rates are, they are actually very, very close. So what it means is that the Fed has actually achieved a kind of a goal where they have actually come very close to or exact or very near to what the market is actually expecting, at least in terms of the shorter end of the curve, which is the 2-year Treasury note. And the 2-year is returning or is yielding 4.33%, and the 10-year is returning 4.578%. So you can see that how close they are in terms of if you look at the duration difference and if you look at the what they're yielding, it's not too much of a difference here. And then let's take a look at the long bond futures. So this is the symbol ZB or ZB, and you can see that here we are also finding some little support, but look, this market has been very, very, very bearish. Originally we were looking for this D leg to be much higher, but the market has proven us the other way. Especially after it completed that big ABCD on the 10-year Treasury note, the markets just have been moving lower. In other words, the yields have been moving higher. So bounce is expected. The bounce could actually take us to about 116. So we're just watching that level. Now let's take a look at what is happening with the US dollar. So this is the daily chart of the US dollar. The US dollar has been pretty firm, but it is right at a level where there is some resistance. So it's beginning to look toppy here. And if we just take a look at this on the weekly chart, here we go. Um, so it's possible that what we're looking for is 108.90 level. It may make an attempt to that, but it's just beginning to look toppy here. And on the flip side, the currencies like Euro USD, um, let me actually move to the daily chart. They are also doing some key levels right here because we have a confluence of a few things coming right here, and there is a potential in the Euro USD. It might be a double bottom here. Because of the holidays, the volumes seem to be pretty thin. There has not been much price action or in terms of the movement in the currency pairs over the course of last couple of trading days. But as we begin to approach into the new year, there is going to be a fair amount of volatility coming into these markets. The British pound is doing something similar. Here we go. We have these key levels right here, so confluence of a number of things. So there is a possibility we could see a pretty good bounce, at least a bounce in this market. Look at this beautiful ABCD we just completed right here. Okay, so now let's move on to gold. Let's see what the gold market is doing. Here we go. So as I had mentioned, that gold actually is in a seasonally positive period in this time of the year. So especially before the Christmas and following the day following the Christmas is one of the bullish days for gold, and this is what we are seeing, that the gold actually stopped moving lower on the 19th of December, and it has crept higher, and on the 26th it has actually done pretty good, but remains sideways. Look at these days where it has fallen massively lower. So I expect, because of the positive seasonal impact till the beginning of the year, the expectation for gold market is to actually remain sideways to a little bit higher, but ultimately the chances are it is actually moving towards 2500 to complete this ABCD, unless it begins to take these highs of 2750 out. Then the gold market begins to look very positive. Now let's take a look at the equity markets really quickly. Here we go. So we're looking at the cash S&P 500. This is the index SPX on the daily chart. 18th of December. This is when the Fed came out. The market had a really big day down, and then this is where where I did the video. I can't remember exactly which day I did the video, um, and but I explained the key patterns of what I was looking at. So this is the key support, 38.2% going back to the September lows, and we have the market symmetry right here, and we were looking for a low in the market, and this is exactly what has transpired over the course of last few trading days. uh, this level of 58.35 is really important. Getting below this, of course the market could actually do a further correction. Now, we have to wait and see whether the market will actually make a new all-time high or whether it just goes into a trading range. Now, one of the key things that I want to point out is that 2024 for the broad indices such as S&P 500 and NASDAQ has been really good, and the S&P 500, it has returned over 20%, and 2023 was also another year of 20 plus percent returns. Now I have to go back and do some statistical analysis and see when was the last time we had a similar situation, and did we had a hat trick, meaning that 3 consecutive years of 20 plus percent returns, or whether we have not had this situation ever, which could mean that moving into January of 2024, excuse me, 2025, we could see some profit taking coming in for tax reason, for example, which means that in early part of 2020, January 2025, we can see some selling coming into the marketplace. So that remains to be seen, and of course, there is something to do with the tax cuts which were promised, which were done by the Trump administration in the first part in 2016 run. I believe those are running out. So, but now we are going to have a new administration come in. They're likely to extend it, but we'll have to wait and see. So that might have something to do with some profit taking as well. But it is something that is possible. As long as the support is held, we remain bullish on the market. So this is what we are watching. Now let's take a look at the Dow Jones. Here we go. So the Dow Jones had been one of the weakest ones because it has just been moving lower. In fact, this is Dow did something which it has not done since 1974, based on an article I saw on CNBC.com. But it went right into this really strong support. So I had actually charted out in the last video how we arrive at these. So as long as it's held, Dow has recovered. So that's a good thing, that what we were looking for based on the support has held. And then if we take a look at the NDX, so I'm going to take a look at the cash index first. Here we go. It's pretty strong. It didn't even make 38.2% retracement. And on the futures market, the futures for some reason closed lower for today, but again we have seen a nice bounce. And if we take a look at the QQQ, here we go, and the QQQ has also actually recovered. Let me actually go here and draw a retracement, and let's see. I don't think it came close to the 38.2% retracement. Nope, it missed it, just like the futures did. But look, it has the low coming from the S&P 500 and also Dow Jones. This market has actually also held that low. In fact, it's above 38.2% retracement, meaning that it's actually stronger. Let's also take a look at XLK. This is the Spider Select Sector Fund for technology, and this one is clearly stronger than the QQQ because the price is much higher. So let's go back to the September, and we can see the prices are higher. So there we go. Russell 2000. Here we go. So the Russell 2000, we had also come up with key support level, and that's really good to see. Support has held thus far, but you can see this index is fairly bearish. It's gonna take some time for the recovery. So our first spot is about this 38.2% retracement. By the looks of it, it could actually get there tomorrow if it's gonna be a bullish day, and so that's a possibility. But there's also a possibility that if once it gets above the 38.2% retracement, it could actually accelerate much higher, and it could, the acceleration we could see is it's gonna the move could be actually faster than some of the other major indices that we follow. So that possibility is there. Now let's take a look at some of the key tech stocks that we like to follow. So let's take a look at Meta. Here we go. So Meta, I'll blow it up like this. Meta also held a support right at the 61.8% retracement. The chances are that actually we are in this purple ABCD higher, which could see the stock move to about 670 level. There we go, and that also aligns with our target on the weekly chart, so we'll have to wait and see. So this is what we are looking at in Meta. As long as this support is held, for 20th of December, then we take a look at Apple. Apple is making a new all-time high. This stock is very strong. So in comparison to some of the other mega seven stocks, this is the one to be held because it just keeps on making new all-time highs. Then let's take a look at Tesla. Here we go. So Tesla, quite funny enough, actually closed lower today after hitting the 61.8% retracement. We have a really long-term target based on this monthly chart of 500. It came very close to it. I would really like to see it getting hit at least the 500. That would be fantastic, but that's a pretty big level to be watching here. There is a chance we could see Tesla get to that level. These highs getting challenged of 18th of December, so we'll see that. And then let's take a look at Nvidia. There we go. So Nvidia also held its support, which was this 38.2% retracement with the ABCD pattern, and there was also this symmetry coming in. So what I am expecting is if it gets above the 61.8% retracement, then it has a chance to actually go for about 160. And so that's going to be 1.270 expansion and maybe a little bit higher to 170. And if that were to happen on the weekly chart, this is the pattern that we were watching, and we after I hit that this level just close enough to this one, we were watching for 150 153. We got there, we got the 150 152.89. Then we were expecting for the market to be sideways to lower, which also the market did, and then 38.2% retracement has been held so far. So we also have this bigger or higher 1.618 expansion coming on 170. So there is a chance the market could actually make a move towards that as long as the 38.2% retracement is held. So this is what we are watching in the stock indices and some of the key US technology stocks. So if you found this video of educational value, then please give it a thumbs up, and if you like our technical analysis, then please subscribe to the channel, and if you do that, hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.